Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very excited to be with you here this morning as we are going to be taking another fresh new look at the financial market. But before we kickstart this session, let's quickly run through our daily routine by confirming that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So this will give me a positive feedback that we are good to go this morning. So let me see your comments, please, and I'll really appreciate as you do so we can kickstart the session right away. Thank you very much as you do so. All right. So what do we have here? Uh, Hold on a second. So I can see a handful of comment right here. And I can see Mahadev 210, thank you. Ekarimi, all right. Sam 230199, okay, good morning. 6439353, thank you very much. Hello, Carrie, good morning, good morning. Yeah, thank you very much. NCY, Ari J. I see your comment, Carrie. Luluja and Tyson 180, Mickey Hole and Scorpion. All right, thank you very much, guys. I really appreciate the positive energy this morning. And it's on this note I welcome you once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be diving into the financial market using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. Well, since Monday, yesterday, when the week began, we have been monitoring four major assets, which includes the US All Spot, the NZDUSD, which was introduced to us by Ricey Rick yesterday. And of course, we also had the USTech100 and finally the XAUUSD. And in fact, in the last 24 hours, we have been doing pretty well across these assets. So today we are going to be looking at how well we've been doing and how we intend to manage a current position while we also look out for new opportunities ahead of the New York session today. For those of you who are joining us for the first time, I know you will be concerned that what is this all about? Well, let me simply put here that as technical traders, we usually gather here every day, come together as a community, and engage in follow-ups and reviews of our current positions in preparation of the New York sessions. The session usually kickstarts 10 a.m. UTC, 11 a.m. West African time officially, and I recommend that you stay tuned in so you don't miss out on any of the insights that we will be sharing during the course of this session. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with me, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and I encourage you to actively engage in the comment section. So with that being said here, we will be diving right into the business. I can see your comment, Rice Eric. I see your comment, C24F. Thank you very much at 89. All right. So with that being said, let's move right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors, as we do want to know what factors will be affecting the market sentiment today. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, on the economic calendar, we usually focus on high impactful events from the economic dockets that affects the assets on our watch list. And based on the asset on our watch list for this week, we will be focusing on both the United States, the United Kingdom, and of course the New Zealand economic docket. So this is a new development due to Rice-Eric's inputs into our watch list for this week. So let's filter in, and what do we have here? And let's see what's going on. So for today, Tuesday, November 21, we have a handful of impactful events from both the United Kingdom and the United States economic docket. Now, if you look at what we have here, in about 4 minutes from now, we will be witnessing Governor Bailey's speech and as well the monetary policy report hearings. Now, these are very impactful events, especially that of the Governor Bailey's speech, though he had a speech yesterday where he talked about the inflationary status in the United Kingdom, which is of course gradually easing at this point in time. And this is more or less an hawkish statement, as there is a chance that we will be having another interest rate hike again before the end of the year, which is something positive. But today we also want to be looking forward to see what he will be saying, as it will be giving us an insight into the monetary policy of the bank, of course, and the economic outlook of the bank as well, and then potential policy shifts, which will be what everybody will be looking forward to. Then we are going to be looking forward to the monetary policy report hearing. Well, this is by the Treasury Committee is appointed by the House of Commons to examine the expenditure, administration, and policy of the HM Treasury, HM Revenue, and Customs and associated bodies, including the Bank of England and the Financial Services Authority. So these are another reports that will be on the watch list of every trader who trades the pound sterling, of course, as it will be giving us an insight into the health situation of the United Kingdom economy. Then later today, we will be witnessing the existing home sales change from the United States. Now, for those of us who don't know, the existing home sales is released by the National Association of Realtors, and it provides an estimated value of housing market condition. And we all know how the housing market is considered as a sensitive factor to the United States economic docket, and it usually generates some volatility for the US dollar. Now, generally speaking, a high reading for the existing home sales change will be a positive signal for the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the existing home sales change, it came in at a deficit of 2%, which was a contraction, and then we do not have any projection yet. I'm of the opinion that this will come maybe in an hour or so before the event happens. So we want to be looking forward to what the actual data is going to be on that one. Then finally, we look forward to the publication of the FOMC meeting minutes, which will be coming up in about 9 to 10 hours from now, and everybody will definitely want to be looking forward to it too as well. Now, for those who don't know, the FOMC minute is the official records of the meeting held by the Federal Reserve's FOMC, typically released 3 weeks after each scheduled meeting. Now, this minute provides a detailed account of the discussions, debates, and decisions made by the committee members regarding monetary policy, economic conditions, and future policy action. So it's one event everyone will definitely want to be looking forward to. And based on the information we have gathered from the economic calendar here, we all know as technical traders that the anticipation of this event alone usually affect the market sentiment, which definitely will reflect on the chart as price action. So talking about price action, let's dive right into the business. And the first asset we will be looking at is going to be the US All Spot. And as usual, my US All Spot chart usually takes some time before it loads up. So we will have to wait for some couple of seconds. Okay, here we go. So the first asset on our watch list for today is going to be the US All Spot. And in fact, in the last 24 hours, we have been doing fairly well as we were able to scoop in about 100 pips thereabout before the bearish momentum came in. And I do hope that we all moved our stop losses accordingly as soon as price action moved very well in our favor. Now, with the way things are going right now, I'm still of the opinion that the bullish momentum still looks valid, as the bearish momentum we've seen in the last 7, 8, 9, 10 hours, especially during the Asian session, may more or less be a retracement of the impulsive move that started this week. Now, there are other things I would also like us to take into consideration before we look at the technical aspect of this particular market. Now, today, like I told you earlier, that we are looking forward to the FOMC meeting minute, and all attention is going to be turning to this event, which is anticipated to provide insight into future policy rate movement. And also, the release of the U.S. crude oil inventory data, including API weekly crude oil stock and EIA crude oil stock change for last week, will be released today and tomorrow respectively, and could significantly impact this US dollar dominated oil prices. Now, given the reset selling pressure, all buy positions are being closed. And for the sake of those of us who were not part of the live session yesterday, let's quickly run through what really happened on the 1 hour time frame that made us to consider buying the US All Spot. Now, during our live session yesterday, we did talk about the fact that price action was confined within a range that is between the $76.80 level and the $75.90 level, to give us an insight into the level of uncertainty that gripped this market during the first 8 to 10 hours of the new week. And of course, within that range, we noticed how price action was finding higher highs and higher lows. And remember that we talked about how significant the current structure is, especially on the 4 hours time frame, where price action was at that point in time trading around the resistance line of the descending channel we identified on the higher time frame. Don't worry, we are going to be looking at that in a moment so you can have a better understanding into what we are talking about here. Now, with this situation where price was caught within a range, you know how we do it in this community. We want to wait patiently for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And even right within, during our live session yesterday, I told us all that we can capitalize on this buy position. And if you had done that, we had our first buy position for the week triggered as we saw price move all the way into the $78.40 level, giving us about 160 pips move on that first buy position, as you will see here. Then secondly, we talked about adding more positions at the breakout of the $77.95 level. I'm not sure we talked about this yesterday, but I did had another buy position triggered around that area. So if you had only one position, and of course you know how we do it in this community, when price moves very well in our favor, we move our stop losses and secure the position. And of course the sell pressure resumed and took us out of that sell position with a minimum of 100 pips on this particular one. And for those of us who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, with the situation we have right now, currently we do not have any positions running. And what is going to be our plans for today? Are we going to continue buying? Or are there chances that sellers could come in at any point in time to take price further to the downside? Now, there's another thing I would also like to emphasize here, which I told you about yesterday, as there are speculation mounting over potential production cuts by the OPEC Plus member as its upcoming or forthcoming meeting on November 26 draws near. And this, for me, for the market participants, is a signal that we might likely be seeing some increased demand ahead of this event coming up this coming Sunday. Now, this could likely incite some bullish momentum, and in fact, with this in view, I'm of the opinion that the chances that price will continue to the upside is hereby increased. But that doesn't mean we will jump into conclusions. We need to listen to what the market is saying by using our tools, trend lines, key levels, and chart patterns to understand the psychology of price action in this particular market. Now, for us to do this, let's scale up into the higher time frame where we started our analysis for this week. Now, the first thing we did at the beginning of the week was to look at the 4 hours time frame. Now, on the 4 hours time frame, what we did here was to take into consideration the nature of price action in the last 3 to 4 weeks, and in fact we had a very beautiful and simple setup to work with. Now, if you look at the structure closely, it is quite clear that price action has been on a bearish momentum in the last 3 weeks as it continues to find uniform and consistent lower lows and lower highs. Now, if we connect this line, these highs and lows together, we have a beautiful descending channel, and in fact, connecting the series of lower highs here, we have the resistant line of the descending channel, and when we connected the series of lower lows, we have the support line of this descending channel, giving us a range to work with. Now, with the situation we have here, coupled with the descending channel, is a key level situated at exactly the $76 area. Now, we talked about how important the $76 level is, as we saw how it has been playing a major role in determining the direction of price action since the beginning of this month. We saw how this area was a selling niche at some point. We saw a little bit of consolidation phase around this area before price broke out of the structure. We saw a retest of this area here, and not until last week's trading session, we saw price break down this key level with an engulfing bearish candle. And of course, we saw how price action came back to close just exactly around the $76 level during the last trading day of last week. So you can see how crucial this key level is. And one more interesting thing about the key level is how it beautifully shares a confluence with the resistant line of that descending channel, which we identified here. And one of the things we were looking at yesterday is that if price will break out of the key level and the resistant line of the descending channel, this will welcome buying opportunities. And if price breaks down resistance line, and this will give us opportunities to look out for selling opportunity. But instead, price broke out of the structure, which triggered our buy position. And right now, how do we intend to capitalize on the next move? And what do you think is likely going to be happening around this area? Now, if you look at the structure closely, you will see that price action had already broken out of the resistance line of that descending channel, which is a very, very significant factor at this juncture in the market. And from a technical standpoint, usually when we see this kind of situation, we expect that at some point in time, price may likely come back to retest the structure in anticipation of an uptrend continuation. So in line with this observation, we want to be taking the potential or the possibilities of sellers bringing price back into either the trend line or the $76 area before an uptrend continuation happens. And in fact, if it breaks down, then we know that we are back within the seller's territory. Then look out for selling opportunities back into the support line of the descending channel. Now, with this information in mind, I also want to state here that it is not all the time that price action follows through with this theoretical expectation. We might say it will go down into this area to retest it, and in fact it could form an uptrend continuation pattern here, breakout, retest of structure to incite an uptrend move. That too is also a possibility as well. Now, if we are really going to be having a well-informed trading decisions today, we want to scale back down into the 1 hour time frame so we can understand what is really going on about this recent bearish momentum that started during the Asian session. Now, to do this, let's scale back down into the 1 hour time frame. And in fact, if we scale back down into the 1 hour time frame, I have a beautiful setup here that we will be using to guide our decisions for today. Now, the first thing first here is the fact that since last week Thursday, price action has been finding higher lows, and what I did this morning while trying to dissect the current market structure was to connect the series of higher lows, and in fact I had a couple of ascending trend line here that we are going to be using to guide our decision. So we have the major one right here, and in fact we have the temporary one right here, though the temporary one has been broken, so that one is not really significant, as we will need this one right here to guide our decisions for today. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying the asset. And the only condition that will make us want to start considering selling is for price to break down the ascending trend line, which appear to have happened right now, but most of the time it could turn out to be a false breakdown. So let's zoom into the current structure and let's see what is happening around this area. Now, since price broke down the ascending trend line, we saw a little bit of consolidation phase around this area, which further emphasized the indecision going on in this market, which also emphasized the importance of this current juncture where price action is. Now, another thing I would like to call our attention to is the resistance line of that range at the $76.80 level, which was broken yesterday. And from a technical standpoint, when price breaks out of a structure like this, we expect that some point in time price may likely come back, retest the structure to incite an uptrend move. So everything around this area is screaming bullish for me, and in fact I want to consider buying the USOILSPOT as long as price action remains above this structure. Now, to help me guide my decisions for today, I was able to identify a beautiful level around the $77.50 level, where I will need a breakout retest of the structure to capitalize on this bullish momentum. And one thing I would also like to state here is that there are chances that price could still drop back into this area before the bullish momentum happen. So we still have both the resistant line of that range, which still further emphasize that buyers still have a say in this particular market. So what this simply means is that I will continue to hold on to a bullish bias, break out of the $77.50 level, welcoming buy put opportunity for me. And if price continues to climb, then I want to be looking at the breakout of the $77.95 level, $78.40 area. And if price continues further, a breakout of the $79 level will be welcoming more buy positions for today. So let's see how this is going to play out if price continues to the upside as we all expect. We have like 4 buy positions to capitalize on this one. So for me today, I'm looking forward to bullish expectations. Let's see how far this momentum is going to go. Now you might be asking, what are the chances that sellers have based on this current market structure? Well, if you will ask me, let's look at the 4 hours time frame together and see what is going on here. So the chances that sellers may have here may be in form of a retracement back into either the $76 area or the trend line, which dovetails to about 150 to 160 pips to catch there. But personally, if I want to consider selling this asset, I would rather want to see price break down the $77 area. So you do want to be marking out this level, 77 level, to capitalize on that downtrend move at that point in time. So where's the $77 area here? Okay, we can just use the $76.80 in that regard, since we have our resistant line around that area. So if price drops below the $76.80 area and continuous selling pressure persists below the structure, then we could start considering selling back into the structure that was broken during the yesterday's trading session. So these are my views on the US All Sports. I'm more of leaning towards bullish expectations, but if price breaks down the $76.80 level, taking us out of these buy positions, then we can start considering selling right below that structure. So if you have any questions for today, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right, so in the absence of no question, okay, I see your comment here, Lady Wild. I like that name. Good afternoon to you, or good morning to you. Caesar, good morning to you. Thank you very much. Then there is this other name here, which I think it's more from Sanskrit, maybe. But I'm not sure I understand what you wrote here, but I say hello to you and thank you for checking in on us here today. And Amandi1992 says US oil gonna keep falling today. Well, we just talked about the US oil, so I do hope you are part of that session as we deliberated on it. So in the absence of no further questions, I want to okay, I'm very well, thank you, Lady Wild, and trust you're doing very well out there too. All right. So let's move on to the next asset on our watch list. All right, so the next asset on our watch list for today is the US Tech 100, another phenomenal asset on our watch list for this week, as we have done pretty well in the last 24 hours on this asset, scooping about three buy positions at this point in time with the hopes that price action will continue to find new highs around this market structure. Now, let's quickly run through how the week started for us and what led to the decisions we made during our live session yesterday, right on the 1 hour time frame. So at the beginning of this week, the first thing we observed was how price action was initially confined within the 15,845 level and the 15,790 level, giving us an insight into the uncertainty that gripped the market for the first 10 to 12 hours. And of course, you know how we do it in this community when we usually find a range, a level of uncertainty in the market such as this. We want to exercise patience and wait for either the breakdown of the range to happen to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. And of course, we saw what happened about an hour into our live session. We already had the breakout of structure. I told you I already had the position triggered at that point around this area. And I did say here that if anyone had missed out on that opportunity, that it's okay. Let's wait and see if the market will come back and retest the structure to give us an opportunity to join the uptrend move. And this was exactly what happened. A couple of hours into the New York session, we saw our price came back, retested the structure, and I do hope you had your buy limit orders set. If you had them set, you must have had a buy position triggered. Then remember that we had multiple entries that we said we will be using to maximize the potential of that bullish move. So we had levels such as the 15,800, where we said we will be adding more buy positions. We also added one more at the 15,970 level, which was duly identified during our live session yesterday. So at this point in time, if you had capitalized on all of this move, you will currently be running with a minimum of 3 positions in profit at this point. Now let's look at what we have here. The first buy position, if you still have your buy position running at this point, the first position should be in about 190 pips in profit, while the second position should be in about 150 pips in profit. That's about 340. And then the third position here should be in about 60 pips in profit. So we have approximately 400 pips in profit at this point in time. Kudos and congratulations to everyone who has been part of this profitable journey. And if you still have a buy position running at this point in time, you know how we do it. We want to ensure that we move all our stop losses to secure all the buy positions we have at this point in time. Now, personally, if you look at this current structure, I'm of the opinion that around the $16,000 area seems most appropriate to lock in all stop losses at this point. Kindly move your stop losses to anywhere within that range, and remember that we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this point in time, how do we intend to capitalize on the next move? Are we going to continue buying the US Tech 100? And if we are going to be buying, where are we going to be looking out for the next buying opportunities? And if it so happens that we might likely be seeing some profit-taking activities, of course, we are not going to be negating the idea that sellers could come in at any point in time, as those who had bought at a very cheap price, let's say around the 15,850, would have scooped in over 200 pips in price movement on multiple positions will want to be doing some profit taking activities, closing in some of their positions to take some profit off the market, which usually reflects on the chart as a retracement move. So we are going to be taking all this into consideration while we position ourselves for the next move. Now, how do we capitalize on that? Now, the next thing I would like us to do right here is to have an holistic perspective into what is really going on here. And for the sake of those who missed out on our earlier session, you have the privilege of being on the same page with us. So with that being said, we will be scaling up into the higher time frame. Now, I think we started our analysis on the 4 hours time frame, and here we are on the 4 hours time frame. And if you remember vividly how we took into consideration the nature of price action since the last week of the month of October, and if you look at the structure closely, it is quite obvious that price action has been very, very bullish. And in fact, in that regard, we have an ascending trend line which we marked out on our chart, and of course this trend line here is going to be playing a major role in guiding our trading decisions for today. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to continue to look out for patterns and structures that supports the idea of buying that asset. Then in addition to the ascending trend line, we were able to identify some couple of more levels like the 15,775 area, which happens to be the lowest point in the last couple of weeks now. And then we said the only condition that will make us want to be selling the USTech100 was for price to take down that area, which never happened, of course. And then we also had our key level for this week at the 15,850 level. And you know how we use our key levels in this community. As long as price remains above that key level, we shall feel comfortable in our buy position. And this was one of the major reasons we decided to buy yesterday. Now, with the situation we have right now, price action has really climbed further to the upside, breaking out of the previous high at the 15,970, and it appears that the momentum is still very, very strong with the hopes of finding new highs. Now, with our trend line around this area, remember we have a trend line here which we marked out. Will price action come back to retest it or retest the 15,970 to incite an uptrend continuation? Or are we going to be seeing a situation where the trend line and the 15,970 will be broken and retested to incite a massive sell-off to the downside? So these are the scenarios we are going to be looking at. And for us to be able to capitalize on the next move, we want to see what has been going on the lower time frame in the last 20 hours. Now, if we scale down into the 1 hour time frame, we will begin to see things more clearly here. Now, let's zoom right into the current structure. Remember, I told us all to secure our positions. I hope you have done so accordingly. Now, if you look at what has been going on here since the later part of the New York stress session stroke the Asian session, we saw that as soon as price action tested the 16,065 level, which happens to be the highest point price action has been for this year, we saw some selling pressure resume around that area. So there's some sign of doubt here. There are some level of fear coming in right now, with people thinking that there could be a crash may come in at any point in time. And as a result of the selling pressure, price action has transitioned into a range where you will see vividly that price action is currently confined within a range, as you will see here. Now, if we do it correctly, we should be having, let's see, 16,015 levels should be okay. So I want to be labeling the support line of this range as 16,015, and I hope you do the same thing too as well. Now, if we go to as far back as the later part of the New York session, we saw buy pressure here, and in the last 3 to 4 hours now, we have been noticing buy pressure. around that area. Now, will this range where price is confined within the 16,065 and the 16,050 become a platform that will incite an uptrend continuation pattern where a breakout of the 16,065 will be welcoming buying opportunities? So that is one way we are going to be looking out for buying opportunities in this particular market. However, if price breaks down the 16,015 level, that is the support line of that range, are we likely going to be seeing a downtrend scenario? Well, if price breaks down the 16,015, I will be very careful before joining any bearish move. Remember, price actions will still remain above that ascending trend line we spotted on the 4 hours time frame. So if price at any point in time breaks down the 16,015, I will still feel that buyers can still come in around this area. Maybe when price gets here, we could see some buy pressure or reversal pattern to incite an uptrend continuation. Now, the only condition that will make me want to consider selling the USTech100 today is for price to break down and in fact retest the trend line, and then at this point I know that the trend line may no longer have the capacity to continue to negate the bearish attempt, hereby giving us the opportunity to join a bearish momentum to the downside. So you can see how the ascending trend line here is going to be playing a major role in determining the direction of price action for today. So you do want to be marking out the trend line, mark out this double levels we have here, which has formed a range between the 16,065 and the 16,015 level to give us an opportunity to capitalize on the next move. So let's see how this is going to play out today. It's a very simple setup we have here, and I will definitely we shall come back here tomorrow to see how well this asset has been doing. So if you have any questions as regards to my explanations, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds as usual to see if there are any questions, and you can as well use that time to mark out these levels on your chart. All right. Okay. So I saw Lady Wild here saying that am I real or a robot? What a question that is. All right. All right. So okay, I'll take that as a compliment anyways. So in the absence of no questions at this juncture, I want to consider this as a feedback that everyone is on the same page and that we can move on to the next asset on our watch list. But if you still have questions, feel free to drop them. I will be checking it from time to time. So moving on. So the next asset on our watch list for today is the New Zealand USD, which was introduced to us by Ricey Rick yesterday, and I do hope Ricey Rick is still around with us. If you're still around, give a shout out in the comment section, Ricey Rick. I want to be sure you are still around with us this morning, and I do hope you are able to take advantage of these trading opportunities that happened yesterday. Now, during our live session yesterday on the 1 hour time frame, we actually identified a range. Remember, we identified a reversal pattern on the higher time frame. We shall be looking at that in a moment. But within the 1 hour time frame, we were able to spot a range after noticing how price started the week around the 0.598 cents level, and then we saw price climbed to as high as the 0.60410 level before some retracement move happened around this area, giving us a choppy situation at the beginning of the week. Then one of the things we said here was that since we had the key level, which price action was oscillating around, and of course you know how we use the key level in this community, as long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. And of course, within that range we identified yesterday, we saw price break out of structure of the key level, came back to retest the key level, and I do hope you had your buy limit order. If you did, price came back to test the level before it finally broke out of the 0.60410 area. And if you had missed out on the retest of structure, we had the privilege of joining the breakout of the 0.60410 level, and if you had done that, well done, and kudos to you for being on standby to capitalize on this move. So currently, you should be having a minimum of 2 positions, where the first position is currently running with about 63 pips in profit, while the second position is running with about 27 pips in profit. So we have a total of about 80 to 90 pips at this point in time, which is not bad at all for the first half of the week. Now you know how we do it in this community, especially when price moves considerably well in our favor. We want to be moving our stop losses accordingly, and let's secure the current position. And to do this at this juncture, I will be suggesting that let's place our stop losses around the second entry, which is around the 0.60410. While you do this, ensure that you give enough space for price action to breathe. Now, with a well-secured position, what is going to be our plans for today? Is price going to continue to the upside, or are we having chances that price action will drop to the downside? Now, if we consider the strength of the US dollar at this point in time, we know that the dollar is not doing very, very well. The US Treasury bond yield has been declining since last week, Thursday, and I'm not seeing any sign that there will be some recovery. I think we saw some recovery during the Asian session, but I'm not sure if that will last long. And if this persists, we might likely be seeing a further rise in price here. Now, another thing that can make a lot of people be mindful of taking any aggressive bet at this point in time may be due to the anticipation of the publication of the FOMC minute coming up much more later today. And as a result of this, we might likely be seeing some choppy situation go on first before that significant move happens. So we might likely see some oscillations between the 0.60350 and the 0.60410 for a while before price action does break out of that structure. But let's quickly run through the higher time frame quickly, and let's see what is going on around that area before we come back and make a decision for today. So move your stop losses accordingly, lock in the current buy position, and let's see what is going on from an holistic perspective. So I see you, Rice Rick. Glad you're still around with us, and let's see what is going to happen today. Now, yesterday we scaled up into the daily time frame, remember, and let's look at what we really saw on the daily time frame that led to the decisions we made. Now, the first thing we did on the daily time frame was to take into consideration the nature of price action since the beginning of this year. And while we did that, we were able to identify the fact that price action has been bearish, as we saw series of lower highs in this market, which we of course connected to give us this descending trend line. In fact, we had a couple of descending trend line in that regard. However, we noticed something interesting in this market. As soon as price got into the 0.586, that was in the month of September, we begin to notice that price was unable to find a lower low to further emphasize the strength of the sellers here. Now, we saw what happened in the space of September, and on November, we saw how this zone had been resisting all attempt by the sellers to break through this area. So every attempt to break through has been met with strong resistance from the buyers, giving us an idea that we are likely having a reversal pattern. And of course, you know how we do it in this community. Whenever we identify the transition of price action into a reversal pattern, we want to be marking out our neckline, which interestingly is also serving as our key level for this week, and that falls at exactly the 0.600 level. Now you know what we do whenever we have this neckline. We need price to break out of the neckline to validate the reversal pattern, which finally happened yesterday, as you will see here, as price has broken that structure and has since moved over 70 pips in that direction. Now the question going into today's trading session is, will price continue to climb? We've already seen price break out of the first descending trend line. Then we also have the second descending trend line right there around this area. So will price continue that momentum all the way to break out of that structure? And if that is going to be the case, I think we also have another level that we will be using to guide that momentum further to the upside. So look at what we have here. We have like 0.61200. So I do want you to be marking out that level on your chart. Let me do some readjustment here. I think we still have somewhere around the 0.61050. I think that is very good. 0.61050 level, another psychological level right there. So let's mark that level out, and you can see how that level shares a confluence with that descending trend line right there. So if price action will break out of the 0.61050, we'll definitely want to be adding more buy position. A breakout of that level will also have broken out of that descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, if we go to the past as well, you can see how the level had played a major role in determining the direction of price action, as you will see right here. And of course, as far back as May, and then as far back as April, you saw how that level had played a major role. So if price will break out of this level today, we want to be adding more buy positions to our existing trade. So let's scale back down into the 1 hour time frame, and let's look at what is really going on around this area. In fact, we can still have one more level to add more position before the breakout of this level happens. So this level is to, let me bring it in so that we can see it in our screen. So we have the 0.61050, right? All right, so we have it right here. So that is the 0.61050. We're looking out for more buying opportunities at the breakout of that structure. But before the breakout of that structure happens, we also have another barrier here, which happens to be the highest point for this week, and that is the 0.60750. If price will break out of the structure, we will be looking out for more buying opportunities at this point. Now, there are two ways to which we can capitalize on the breakout of structures. I usually mention this in our session, but for the sake of those who are joining us for the first time, so that you guys can be on the same page with us. So there are two ways to which you can capitalize on breakouts of structures, depending on where you are with us. Now, for those of us who have been profitable on this asset since the beginning of the week, you can afford to leverage on some of the profit you had made so far by placing a buy stop order above the 0.60750. Now, if price breaks out of that structure and it doesn't work out, then later drop to the downside, then we know that we are only risking some of the profit we are made, so we are not touching our real portfolio at all. However, if you are new with us and this is your first time taking a position on this asset, then I would encourage you to exercise patience and wait for the breakout to happen, price coming back to retest the structure. Then you want to be joining an uptrend move, and if price continues to climb to the 0.61050, breaking out of that structure, we want to be adding more buy positions to our existing trade. So that is how we are going to be maximizing the potential of this bullish move. Now, in as much as we're looking out for buying opportunities, we can never ignore the potentials that sellers could come in, as the minute we are having today is going to be giving us an insight into the monetary policy of the Fed. And I'm not sure we are going to be seeing any surprises anyways, but if anything happens today and inside a situation where market participant reacts negatively and in favor of the US dollar, we might likely be seeing some selling traction. Now, if that's going to be happening, how do we intend to capitalize on that one? Well, first and first here is that since last week Friday, price action had consistently found higher lows in this market. So what I want to do here is to connect the series of higher lows, as we shall be needing it to guide our trading decisions today. So let me thicken this a little bit so that we can see things more clearly. So we have an ascending trend line to work with for today's trading session. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable in a buy position. But if at any point in time today price breaks down the ascending trend line, please let's wait for confirmations to happen here, retest of structure and signs that buyers are finding it difficult to climb back above the ascending trend line. Then we can consider some selling opportunity, maybe back into the key level, remember at the 0.600 level. Let me place this right here. Now, if price gets into this area, the appearance of buy pressure will welcome buying opportunity. So we can look out for double bottom structure or reversal pattern to join the uptrend continuation. But if price breaks down, then we want to be looking out for opportunities to add more sell positions to our existing trade. So this is how we are going to be managing the New Zealand USD today. Mark out the ascending trend lines, mark out these key levels, as you will be needing them as a reference point to guide your trading decisions today. I personally think that price will continue to the upside, but if it does break down to this ascending trend line, we have no other choice than to get ready to sell. So these are my views here. If you have any questions, Rick, if you're still here, if you have any questions, feel free to drop them in the comment section. I'm already running out of time right now, so I will just quickly run through the next asset on our watch list, and I will be checking the comment section after I'm done with that one. So the next asset we will be looking at today is going to be the final asset, which is my favorite. And let's see. So the next asset we are looking at this point is the XAUUSD, popularly known as the gold spot. And in fact, we have quite an interesting situation going on in this market today. In the last 24 hours, of course, and we had some buy positions triggered after being taken out of our sell positions during the New York session yesterday. Remember, we had some sell positions triggered before price was taken out of that situation. Now, gold prices continues their upward momentum, building on the overnight bounce from the 1,973 level and gaining significant traction, especially during the Asian session. Now, the buy pressure has effectively nullified that sell expectations we saw yesterday, giving us a worst case scenario break even, if you would ask me. And the surge in gold at this point is considered to be fueled by the speculations of an earlier rate cut by the Federal Reserve, potentially as soon as March 2024. Now, this dovish outlook, accentuated by a decline in the US Treasury bond yields, remain a pivotal factor driving investors towards safe haven assets such as the gold. Now, while the path of least resistance for this asset appears to be upwards, there may be a degree of caution among market participants refraining from aggressive bets, especially as we are anticipating the FOMC meeting minutes today, and due to the uncertainty surrounding the timing of the federal monetary policy easing. In this contest, it is very critical that we exercise patience and wait for significant structures to mature before we want to be jumping into any positions here. Now, for the sake of clarity and for the sake of those who were not part of our live session yesterday, let's quickly run through how the week began for us all in this community and what led to the decisions we made. Now, at the beginning of the week, we realized that price action was initially caught within a range that was between the 1,985 and the 1,990 $973.50 level to emphasize the uncertainty that gripped this market at the beginning of the week. Now, with a situation like this, you know how we do it. We usually wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, I said this yesterday that with the way things are going, if price breaks down this ascending trend line, then a breakdown of the support line of that range will be giving us an opportunity to sell. And this was exactly what happened. And in fact, we saw our price moved over 80 pips in our favor before we were taken out when buy pressure resumed. And I do hope you moved your stop losses accordingly. If you had done that, you must have been taken out with a moderate size of profit, or at a worst case scenario, break even. Now, while we were trying to project yesterday's trading session, remember that we identified the series of lower highs here since last week Friday. We connected this, which gave us this descending trend line. And you know how we use trend lines here. If at any point in time price breaks out of the trend line, we know that the momentum has finally been negated. Now, during the live session yesterday, we talked about buying if price climbs back above our week's key level at the 1,980, and that we will be adding more positions if price action breaks out of the resistance line. And of course, this fit here gave us two buy positions as we saw price move over 130 pips in our favor for the first buy position, and for the second buy position it moved about 90 pips before this bearish momentum came in. And if you had moved your stop losses, you must have been taken out of your position at this point in time, because I have been taken out of this position as well. Now, how do we intend to capitalize on the next move on this asset? Do we intend to continue buying, or are there chances that sellers could come in at any point in time? Now, let's look at this holistic view here, right here on the 1 hour time frame, and look at what has been going on here since last week trading session. You will see here how price had consistently found higher lows, and for me this is a very good signal that buyers are still very, very strong in this market. And as long as price remains above the ascending trend line, we shall feel comfortable looking out for buying opportunities. Now, the question at this juncture is, price is back into the 1,985, which happens to be the resistant line of that range we identified during our live session yesterday. And interesting enough, that 1,985 also shares a confluence with that ascending trend line. Now, the question going into today's trading session is, will price action respect the ascending trend line one more time to push price to the upside, or are we going to be seeing a situation where the trend line will be broken to the downside? So you can see how the 1,985 level is going to be playing a major role in determining the direction of price action today. Now, let's talk about what we want to see here that will make us consider either buying or selling this asset. Now, look at the structure here. Our center of focus is going to be around the 1,985 area. So what I want to see here is a transition into a reversal pattern. If it's something like a double bottom structure or higher lows and continue buy pressure around this area, mark out your neckline, breakout retest of neckline welcomes buying opportunity. And if price continues to climb up, then a breakout retest of the $1,993.50 level will be welcoming more buy positions. So that is how we are going to be capitalizing on any bullish opportunity today on this particular asset. So as long as price remains above the 1,985 and the ascending trend line, we shall feel comfortable buying this asset. However, if price action drops below the 1,985, it would have broken down the ascending trend line, which would be a sign that the trend line may no longer have the capacity to continue to negate the bearish attempt. So I will need some confirmations to happen, like a retest of structure. Then I want to be seeing a nosedive to the downside. And remember that we have this descending trend line that was broken during yesterday's trading session, as you will see here. Now, if price breaks down the 1,985, we might likely be seeing price come back to retest the structure that was broken in anticipation of another wave of bullish momentum. So these are likely possibilities that could happen around this area. So if price breaks down the 1,985, then we can be looking at a minimum of 180 to a maximum of 200 pips if price pushes to the downside. So you can see how crucial the 1,985 is. So what we want to be doing today ahead of the New York session is to exercise patience, and let's see how the market reacts to the structure. So these are my simple views on the XAUUSD for today. So I do hope I made myself very, very clear. But if you have any questions and you want me to clarify some certain areas you find very difficult to comprehend, feel free to let me know in the comment section. So in that regard, I will take the next 10 to 15 seconds to see if there are any questions. I didn't see your comment, Rice Rick. Are you still around with us? And while I round off for today's trading session. Okay, so I see your comment, Iyobo and Blaze B. Good morning to you guys. And Sajin, how are you doing? Rory Boy, Moms, and how are you guys? I'm very glad to have you around with us this morning. So, Remy, for sure, thank you for the clear technical. Oh, you're welcome, Remy. Glad to have you around with us, and I look forward to seeing more of you around. All right, so it has been a wonderful moment with you guys today. I really enjoyed every single moment. I really appreciate the positive energy in the house. And in fact, we were able to attend to 4 major assets today, which includes the USOILSPOT, the USTech100, XAUUSD, and of course the New Zealand USD, which was introduced to us by Rice Rick yesterday. And of course, we were able to use the fundamental tools such as key levels, trend lines, and chart patterns to identify potential trading opportunities ahead of the New York session. So I do hope you are able to mark out these levels on your chart, and please allow these structures to mature before you jump into any positions today. And another thing I always emphasize here is that always ensure you have a well-defined risk management strategy for every position. Make sure they are very consistent with every positions you make, as every decisions we make in the financial market is more or less an educated guess until price action hits your TP target. For those of you who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I do encourage you to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. Once again, I welcome you on board, and I look forward to seeing more of you. Same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing so far, and of course prepare for tomorrow's New York session, which promises to be another exciting edition. So on this note, I wish us all the best of luck today, and trade smart, trade consciously, and I wish you a wonderful evening, everyone. Bye bye.